Hello and welcome. I'm Richard and this is the Art of Arbitrage. Today on the channel, we're looking at the arbitrage opportunity available in the shares of Spirent Communications through their takeover by Keysight Technologies, a deal which could return an investor an annual return of 37% or a loss of 41%. Let's start by looking at the background of this deal and then go through the numbers to see why the possible returns to an investor through this takeover are so volatile. We'll then look at what an investor who first committed to the transaction in February could be in line to make. I hope you find the content useful, and if you do, I would be awfully grateful if you would drop a like and subscribe. It would really help me with the algorithm and building the channel. So, let's get to it. Spirent Communications is a British telecommunications company that specializes in automated test and assurance solutions for networks, cybersecurity, and positioning. The company provides products, services, and managed solutions that address the test, assurance, and automation challenges of a new generation of technologies, including 5G, SD-WAN, cloud, autonomous vehicles, and beyond. Founded in 1936, the company has grown over the last century by adopting new technologies and from a series of mergers and acquisitions. The company has turnover of almost $500 million and profits of almost $50 million. Keysight Technologies is a California-based company specializing in the manufacture of electronic test and measurement equipment and related software. The S&P 500 constituent boasts revenue of almost $5.5 billion and income in excess of $1 billion. Just like the takeover of our one RCM, which we looked at in the last video, Spirent received two competing takeover bids, which helped to push up the final offer price by 16%. The initial offer was from Viavi Solutions, the Arizona-based telecoms company, in March this year for a sum of £1 billion. Just days later, Keysight entered the fray, bidding £1.16 billion and winning the deal. The board of Spirent are supporting the proposal from Keysight and have recommended the deal to shareholders. Successful closure remains dependent on shareholder and regulatory approval. However, since Keysight made its offer for Spirent released less than impressive financial results for the last financial year. Revenue fell by 22%, and adjusted profits fell by 65.1%. These results have made investors nervous and led to speculation that the deal may not close, or that it may close with amended terms, potentially reducing the offer price. This uncertainty has resulted in the share price of Spirent falling well below the offer price proposed by Keysight, creating an unusually large spread for an arbitrage deal. So, let's take a look at the numbers. Keysight is proposing an all-cash transaction of £1.99 per share, with an additional dividend payment of 2.5 per share. This compares to a market price of £1.09 before the takeover was announced, and £1.76 at the time of these calculations. When we plug the numbers into our spreadsheet and consider the opportunity for an investor in this deal, we see a purchase price of £1.76, a forecast closing date in December, an expected downside price of £1.05 per share, and with a dividend payment of 2.5 per share. This means, should an investor take a long position in Spirent today, they can expect an unleveraged return of 14.68%, which translates to an annual rate of return of 36.96%. However, given the uncertainty that the deals will close, or that the deal terms may change, the risk-adjusted return is negative 18.63%. We should be mindful that if the deal doesn't close, and the share price of Spirent falls to £1.05, an investor can expect a loss of 40.52% at today's prices. If an enterprising investor were to use 50% leverage in the transaction, they could expect a return of 27.38% or 68.93% annualized, for a risk-adjusted return of negative 40.25%. However, let's now consider what return would have been available to an investor should they have committed to the transaction when it was first announced by Viavi in March and held onto their position. If we assume an investor took a long position in Spirent at the time of the announcement for £1.09 per share, and we update the probability of the deal closing at that time and extend the duration to close, we can see an investor would have an expected return of 84.86%, or an annualized return of 101.56%, with a risk-adjusted return of 69.61%. Should such an investor have applied 50% leverage to this position, they could have expected a return of 165.55%, or an annualized 198.11%, for a risk-adjusted return of 135.71%. We can see that a patient investor has the opportunity to generate significant returns from these situations, or, should the deal fail to close on the proposed terms, suffer a significant loss of capital. What do you guys think of this takeover? Let me know in the comments, and don't forget to like and follow if you found this video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price of the company, any change to the takeover price, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you, and until next time, enjoy life.